But I have with me Manav Chopra. He was with us last, Manav, on the 6th of March, if I recall right. And since that point, let me give him credit. The Nifty metal is up nearly 20%. Your call was 30% this year. So it's already done. It's 2/3 of the way through.
Right.
And Tata Steel was your top call, if I recall right. And that is up 21% since that point.
Right.
So we've seen very, very strong gains on both of those.
Right.
Let me start with that. Take a cue from that.
Beg to differ?
Please.
Can I start with what is the puzzling question for everybody in the markets right now? ये market भाग क्यों नहीं रहा है? So, right, let's start with
I
that.
think we should take
Yeah. So
I think makes a lot of sense.
he's got a veto, of course. So
Okay, no, because that's a question in my mind. So I thought let's do that first.
please.
So let us understand the context of the market, right? So what happened in March was one of the panic lows that markets created, and from there we've seen a good rally. Usually, if we go back in time, we also witnessed a similar process where after a very strong rally, there was a correction of 15% on the index, a strong rally, and what witnessed was a time-bound correction. What we are witnessing now, we had a similar formation in 2015-16 also. If you ask me, this is a very healthy pause in a larger uptrend. I would call this as a reset phase when you look things on a little broader perspective. I am of no camping that the markets are going lower or it tests the previous lows. I think that is elephant in the room that everybody should be clear. We are not testing the March lows, to make it very clear. What happens is we are going to form a higher bottom across the sectors. Let it be the indices, which I think my sense is we've already done it or we are at the end stage of doing it. In that process, to answer your part, when this time and pause correction comes to an end, there are definitely what the catalyst can be some news events that can follow, but importantly, it's all positioning at the end of the day, right? There are excessive shorts in the system by the FIs.
Yeah,
okay,
93 to 92 to 8 or something like that.
Yeah, there is reasonable short. So if you ask me on the net index positions, it has also breached your April lows. On the index futures, it's at 1,75,000 contract shorts. Not necessary, that is one of the elevated levels to look at, but with excessive shorts, but what triggers that short squeeze or the end of this correction phase is going to be your breadths. Your large caps has to take that trigger on the upside. And in the past instances, whenever this squeeze has to play out or that momentum flavor that we want all in the market to come in is, almost that stage is coming to that part. So right now, the Nifty 50 breadth indicator, which is greater than 200-day average, despite of this correction is still at elevated levels of 60%. Right now, as on today date, it's at 66%. In the past, the triggers have actually played out. So we have extreme shorts and Nifty breadth greater than 200-day average is at above 60%. The probability of short squeeze is reasonably high at the current scenario. This number from 50 has come to 66%. So my guess is with the elements which are currently playing into the markets and the broader markets is also kind to stabilize. We've seen some bit of positive trigger. I think it's a matter of time when this starts triggering on the upside. So
is this matter of time in weeks or months or?
If I knew the answer,
He's alluding to the fact that he might not have been sitting here.
yeah, you can say that. But I mean, on a very constructive basis, I think what happens after that, I think that is the most exciting part.
Sure, yeah.
The Nifty usually rallies 5% without any correction of even 1%. So a non-stop rally of 5 to 7%, that could happen in a matter of 2 weeks. So I think that is the perspective to look at. So should we actually wait for the breakout? We've already started initiating some long positions after taking a breather for last few months. We've reiterated on metals and other sectors, but my base understanding is that in this end stage, difficult to time what the scenario is, but there will be certain sectors and stocks which will actually start its up move. And that's where one needs to be positioned, and market gives the trigger, so you're already ahead is what we are basing for.
Interesting.
So what are those stocks?
In this bull camp.
So what are those stocks?
What are those?
So our first preference is on metals. I think we have already reinitiated on the metals just a couple of weeks back. If we go to see, important criteria for us to select any sectors or the heavyweight sectors or high beta sectors would be the sectors which are in an uptrend, which have also outperformed in the correction. So, those are some leading indicators. So, metals is one of the sectors we have as one of our top picks, and we remain on that. Still hold with the perspective metals would be testing its all-time highs. There is an additional tailwind that we have from the global markets, mainly the Chinese markets. It has seen a 10-year breakout. Obviously, a lot of technological stocks in the Chinese are taking that, kind of a momentum. But yes, the metal stocks within the Chinese sectors are also doing reasonably well. The iron ore prices have started to move up along with the metal prices. Any uptick in the aluminum, these would be enough tailwinds for us to even come closer to all-time highs. So that has always been my base case. So for metals testing to all-time highs is just the base case for us. Eventually, once the trigger comes in, the momentum rally really sees a lot of momentum ahead. So for us, metals is definitely one of our top bets.
Interesting.
Mahima?
I think IT is another interesting one.
Yes.
We saw 2 days of straight gain where we saw almost 5% rally in IT. Today there's some profit booking. Any view with regards to this sector? And if you were to play this sector technically, what would your picks be?
Right. So for us now, IT has come to a point where it is no more a space where you have to step back. It is a scenario where you have to eventually start looking for an accumulation, at least for a medium-term, long-term perspective. This is one of the sectors which is at its long-term support. 35,000 on the IT index is a very, very strong support. Currently, we are at roughly at 35,000, which is barely anything. So we have seen certain mid-caps which are still doing far better, but I think within that space, large-cap IT has a very strong risk reward. Names like Infi, Techem. If you also go and see the positioning by the domestic mutual funds, majority are underweight. Okay, so you have an underweight sequence already in the IT as a sector. The FIs have been selling IT throughout the 2025. The Nifty versus IT ratios are also had historical support. So for us, IT is at such an inflection point where a 10% move in an IT as a sector like this, I will not be surprised. So that is an additional tailwind that we are looking within the heavyweights to play. As for us, within IT, Infi and Techem remains one of our top bets.
What makes you positive on IT? It's just the oversold nature of it, or what is likely, what's the thesis like?
Yes, absolutely. One of the oversold natures, and not only oversold, but it has come to its long-term support lines, right?
Sure.
And with that formation, we have seen enough selling and selling exhaustion as one of the patterns also playing out. So usually, demand and supply is one of the important aspect we cannot really ignore. But when we know that it has come to an end stage where there are certain accumulations already been witnessed, and any positive trigger that comes in, looking at the broader scenarios and how the market construct is playing. So it doesn't take, any heavyweight sector, especially on the mutual fund side, if they are underweight, in terms of positioning, it hurts their performance to a larger extent. That's where they would want to upsize. So there is a reasonable amount of gain that could eventually play out on the positioning size. But for us, it has come to a risk-reward ratio where IT, at least on the large cap front, should be bought with a strong accumulation, is what we are suggesting.
All right. One of a bunch of buckets wherein there is news flow.
Yeah.
Consumption, clearly the focus of GST plus income tax cuts.
Right.
Anything in that bucket, it could be the AC makers, it could be two-wheeler companies, it could be passenger vehicles like M&M, etc.
Right.
Anything in that?
So particularly from the auto as a space, I particularly like auto anks as a space. Mainly because the names like Endurance, your Uno Minda, Minda Corp, these are going to be your early movers. When the auto index, not before it started even witnessing a breakout, these were already closer to its all-time high. So there are some strong tailwinds within this space. And within the consumption market, it is the hotels that I like, particularly Lemon Tree. So, there are certain pockets of mid-caps, irrespective of where the market is, but they are already in a strong bull grip. So, we suggest that to stay along with these names, sectors, largely going forward. And obviously, with the tailwind of GST, I think the frontline names, but my focus would be getting into the broader markets or the mid-caps, because eventually that's where the momentum would eventually be coming into the markets again.
So Lemon Tree has GST benefits too. I was trying to understand if for example, the AC manufacturers.
Right.
Do they come into the play? Voltas, Blue Star, etc., etc., etc.
So I have seen the broader setups of this space, but only Amber is one of the stocks which is standing out. But other names are more, more of a neutral to a broader trend, which has no clarity for any strong upside at the moment.
Okay, and anything in the staple space then? Your HUL, Britannia, Nestle, anything of that sort?
For me, FMCG largely is going to be a trading sector. I am not of a opinion that this would be a buy and hold, or we see FMCG coming back all the way to its previous 2024 highs. It's going to be more of a stock specific. So for us, I'm only focusing on those key sectors where we do see constructive upside within the bullish uptrend, and that's our initial thoughts with.
You also suggested a rotational play. You suggested metals is the big bet. Any other ones which are looking like low-hanging fruit? You spoke about IT, you spoke about metals.
Right.
Any other sectors? I'm tilting towards financials because it's been a while since we've seen the Nifty Bank underperform, and it's a little tough for me to see that. So, so just joking, but give us your perspective.
Right. So within the BFSI space, I think one of the most interesting themes which is coming up, and I'm already very bullish in that, is the PSU banks. Okay, what we've noticed in the recent correction is that the PSU banks have actually outperformed the private banks. And the kind of the structure that the PSU banks have formed is similar to what we witnessed in the metal index. Obviously, there are different perspectives, but majority of the PSU banks, let it be your Can Bank, PNB, Bob, they are kind of witnessing early stage of bottoming formation. And the construct is turning very positive because the ratio chart of the PSU banks versus the private banks have already breached its previous month highs. So my base case is any stability in the financials, mainly the BFSI space, we will be seeing a reasonable upswing coming into the PSU banks. Also, another part is the Indian 10-year yields, has seen a rally from its 6.1 levels all the way to 6.6. It's kind of halting over there. So, we expect some bit of a that short-term risk of kind of a stage coming to an end, and any momentum or the short squeeze that comes in, usually the metals, the PSUs and the public sector theme is likely to come back into the flavor.
Quick 30 seconds. Gold, silver?
I think they have really rallied a lot, if you really ask me. Yes, I do expect a pause, at least in gold, but not the silver. In fact, silver as a part, when we are looking at the dollar index, I don't see dollar index going or testing even 100. So as long as dollar index is below 98, which is the larger case, but the last leg of the silver can be very sharp. So a retest of its all-time highs of closer to $40 cannot be ruled out. We are at 42, which still has like a 20-25%. But if you ask me gold versus silver, definitely choose a silver over.
Viewers, keep this in mind. Sometime last year, it almost seemed that what is happening to gold, because the gold to Nifty ratio was so skewed in favor of the Nifty that it seemed that Nifty is egregious and gold isn't. Is it the reverse this time? And can gold pause and can equity markets rally? I think that's the big question. Manav Chopra seems to be bullish on markets and specific buckets that you heard. He comes very rarely, so when he comes, you should certainly listen to it. Thank you so much, Manav. Really appreciate your time.